Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed and gregschnell.com. Lots going on out there. We had a rough Friday, a good Monday, a rough Tuesday. So actually Friday was okay. It was earlier last week. And today we're just going sideways. We haven't done anything yet this morning. Kind of gapped up on the open on the news that China wanted a partial trade deal. That's not that new. So not sure why the gap. But anyway, we're going to cover off a couple of things. The new homepage. A couple of the guys at StockCharts have been working behind the scenes to change up the dashboard a little bit. We're going to cover that off this morning. The world without a China deal. And that's kind of what I'm waking up to think more about now. It seems less likely that we'll get some sort of a deal. And so does that just mean we go into kind of a Cold War status like we did with Russia and everything just kind of simmers along without China being involved? Or how does that work? So I'm starting to piece together how that might work, and we'll be talking about that over the coming months. Gold today is up slightly, trying to rally. But what we see on the bonds is they're starting to roll over, and we talked about it a while ago that they looked like they had made their momentum high, and now they might be retesting that high. And for me, I expect that they're probably done the move in bonds, and so maybe we'll see a rotation here. So we're going to talk about that. And I went through and did some new highs. And as we break into the new month, it's always good to check and see what's going on out there. And so when I run the scan to say, what's up in the last, 6 months or 1 year, I'll show you that scan. It's pretty simple to do, but it works best. It doesn't work best on the first day of the month. It works best on the last day of the month or as you get into the month to kind of see what's working. So anyway, we'll talk about that. The next thing, we'll talk about the schedule. I'll be speaking at the Canadian Technicians Day on October 19th, live and online. We've got 5 speakers there. You can go to csta.org, find the online deal for $35, and that's a Saturday, all day, 5 speakers. So hopefully you find that outstanding. And then gregschnell.com is getting closer. Lots of things. There will be a broadcast email going out today. So if you haven't put your name on the list, you could do that, and I'll send out an email to you today to see if everything's working great. Okay, let's jump over to what we want to talk about. Actually, I'm going to go get one chart first, or from the dashboard here. And what we see on the dashboard now, with this gear icon up here in the top right-hand corner, you can click on this icon, and what it does is you can ask for chart list panels or additional data panels. But if you click this commentary panel, I think you'll find this quite nice. You should be able to see these new articles that are posted, and it'll put the top 10 or the top 10 most recent articles on there. And so hopefully that works for you. And again, you can click on this button over here to go to StockCharts TV and click live. That would be a little odd if I did that, so we won't click on that. But adding those two things, and again, the way you did that was to go to the settings panel and click on add the commentary. So anyway, that option is now available. We've also changed up this market overview, and I particularly use this page a lot. So almost every day as I'm clicking through, I like to just go in and say, what's the NASDAQ doing? And then I click on this chart and it brings up my gallery view. You can see basically we've been in a downtrend, tried to make a higher high here, failed. And then we drizzled down yesterday afternoon, and then now we're just kind of locked in sideways here. This is just a 10-minute chart. When we go to the daily, you can see we're bound here between the 50 and the 200-day moving average and trying to figure out a direction. So far, momentum is pointed down. And when we look at the weekly view, the one thing that I'm starting to see is the NASDAQ underperforming against the S&P 500, and usually that doesn't bode well. So here, as an example, we had an uptrend, and when we stopped outperforming, that was also when the market corrected quite hard. So we're rattling around that level, and on a 4-year chart, you can go all the way back, and we've recently just broken below that level. We have to see if we can bounce here, but it's a pretty important place. We can also see that, other than October of 2018, that our momentum is at the lowest level it's been at for, the majority of the 3 years here going back. So we're we're quite a bit weaker in momentum. We're less than 1% on the PPO, and so to me, it makes the market very cautious. Anyway, looking through the different chart settings here, again, that we got here from that home page, from the chart icon, and now there's also other ones that you can pull up here, and if you click on that, then you'd be able to get gold, and so we're going to go into that one right now. So on this gold chart, what we see here is gold has made this kind of V up, and momentum is trying to improve here on the short-term basis. When we look on the daily, we're just kind of extended out to the right here, and we're trying to hold this 50-day moving average. Everything looks like it's coiled and getting ready to pop to the upside. So that would be very nice if you like to trade gold. I've got two other tabs up here set up, GDX. I think this one's GLD, if I haven't made a mistake. Anyway, on the GDX tab, what we see there, we could do the same thing. Obviously, just go to the top, and we can put these two side by side. And when we look at them, what we want to see here, you'll notice that gold kind of bounced more than GDX did, and now this is looking like it's making higher highs. This has not made higher highs yet, so usually it's bullish when the miners outperform the metal. And then as we're rolling here, we're trapped right at the 50-day moving average with GDX as well. So we really want to see if this has the momentum to turn and improve and break out here. On the weekly chart, some of the strongest areas of the market have obviously been in the ETF space has been GDX and GLD. Both of them are pinned up right near the top. But is this a bull flag, or are we rolling over like we did back here in 2016? And that's the real question for us all that we're trying to answer. You'll notice that the full stochastic on GLD is already down around 50%. When it bounces at 50%, that's usually a very bullish place to look. So I would say we're literally teetering here on an interesting spot for the market to try and rally out of. Should that rally fail, that would probably mark one of the bigger changes. So don't overstay your welcome in gold, but if they can start to run, that would be helpful. And again, these two ETFs are both trapped right at the 50-day moving average, and commodities in general, you like to be above the 50-day moving average. So we have to watch this pretty closely. Okay, I did mention the bonds, and I've done the same thing here. I've gone to the gallery view, and again, if you put in two ticker symbols, you can see both side by side. Here we have the 10-year on the left and the 5-year on the right. And what you're noticing here is we've still got our downtrend, and we've recently tried to bottom here and start to turn back up. That's a 10-minute or 15-minute chart. But here's your daily view. And again, here's our 50-day moving average winding down. So this is bond yields, not bond price. This is winding down. And then right now we're testing the prior lows on the 5-year, and I'd say on the 10-year, the same thing. The 10-year and the 30-year look very similar, with a bit of a higher low so far. Now, as this comes down here, the extreme sentiment, especially on a weekly chart, which is just below, the extreme sentiment we reached was, in the last 30 years, we've only gotten kind of that stretched a few times. So it's one of those places that we want to be very aware of the potential for a final low to be in place. And this might be the retest of that final low, and then we bounce out of here. If that was to happen, what we might see is a rotation out of REITs and into financials like banks or whatever, if the interest rates started to improve. So that's one thing that I continue to watch for every week here. And this is what I was talking about in terms of momentum. We were way down here in the lows, and we've got this downsloping trend line here in momentum. If we start to break that trend, I think that's a pretty bullish place to look. We saw the same thing over here back in 2016. So as momentum changed, started to turn up, and it really started to accelerate. And you might remember that the banks ran about 25% in here. So this was quite an exciting place to be part of the banks. And I didn't go look, but I'm pretty sure the REITs got hit pretty hard there as this accelerated up. So anyway, if there's a rotational trade coming, that might be one of the rotations to watch for within the sector group. I do have a lot of angst around how much the banks can rally if we're having a slowdown in the economy and if the China trade talks don't go well, blah, 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 blah. The bigger issue for me on all of this is I think if the China trade talks don't go well, the commodity segment's going to be hard. We're going to continue to struggle in the manufacturing sectors. So with those two nuggets kind of blocking our view or um, slowing stimulus, I'll call it, that setup doesn't lead well to big economic expansion. So I'm trying to imagine that the banks, even if they did rally just because of the yield improvement, we wouldn't be seeing the economy improve that much. So it's quite difficult here to call how this all works out. Spending quite a bit of time to try and find interesting charts that help show us that. So I do think as we look at these point and figure charts, just here, you can see that this downtrend has been pretty steep, multiple big pushes down. But again, right now we're testing the bottom. And so does this turn around and break higher here? I get the feeling we're near the extreme. And if I just took the 10-year here and click on that and extend some time out, just whatever, pick 20 years or something, what you can see is this PPO down here at -10 is kind of one of the biggest levels we got to, like in '09, right in the spring of '09. This was one of the major critical turning points in the market. So try and be aware that our sentiment is so oversold here, or sorry, overbought on yields, on price, and oversold on yields. Hopefully that makes sense. And again, when we're down at this extreme, we're now looking for reversals. This one here lines up with this low here, not this low here. So we actually rallied up, failed, made a lower low, but made a higher low in momentum, and that was the final turn. We haven't done that yet, but in '09, that was the final low. Anyway, all that to say we're at extreme levels. We're testing this triple bottom setup here. And what we want to see is which way does the market kind of flex from here. When we look at the yield curve over a long period of time, and let me just go get a chart to show you that. I want to go here. One of the things that will happen, I'm just going to go view all and go to the third page. One of the things that happens here, these are all the bond yields. And this was the normal sort order with the 30-year, then the 10, the 5, the 3, the 2, the 1. And as you're working down, this was normal. And what happens as the market starts to crack is you get all of these kind of compressing together, which we've seen, and starting to drop away here. During this drop, what happens is, see how they spread back out here? This is the normalization process. But all through this period in here was a big downtrend in the US stock market. And it was actually when they were fully normalized and spread back out again, the stock market made the lows, even though the yield curve had returned to normal. So the point I want to make is we're watching this part of the transition happen now. And what we should see over time is that the lower or the shorter time frame yields continue to go lower, but we see the 10-year and the 30-year kind of pause. So they might still come down a bit, but they're not coming down as fast as the other ones. And then the yield curve slowly spreads itself back out. So that's one of the important things to watch for as we change trend here in the bonds. And if the setup that we've got in terms of momentum is starting to peak or make a major bottom, well, what we need to find is how we change our asset structure as we go forward coming out of there. And the question is, will the financials start to perform? Okay, we have a quick commercial break to take, and we'll be right back. Thanks, everybody.
Missed the live show? Want to rewatch a workshop? Tune into the StockCharts TV YouTube channel to catch up on the latest programming and content. All of our live shows, workshops, special guests, and more can be found there. Each category has its own playlist, so it's easy to locate. We even have chart school and creative strategy videos to help you become a better technical trader. Leave comments for our commentators, like your favorite videos, and don't forget to subscribe to our YouTube channel.
Okay, we're back. And what I want to talk about here is this is the This chart is where we left, and I'm going to switch off of this and go into what's working now, the church of what's working lately, as Mark Haynes used to say. Um, so what I've done is I've run a simple scan. Let me just show you the scan first of all. So the country is the US. I've picked the exchange. I want to pick the NASDAQ and the New York Stock Exchange. And the reason I've done that is I don't want the Amex and other exchanges like that. I want to focus on kind of the bigger stocks in the industry, and I want to focus on stuff above $5 here. So we're not trying to get into the weeds and just see every little stock that's going. We want to see what the bigger stuff is doing. So by using this OR command, just so you know, you need two brackets here. So you need one here and one over here to make that OR command work. And then the type is stock. I want it to have at least 300,000 shares traded per day. And actually I think that'll go daily volume. And then this month's high is greater than last month's maximum high for the last 6 months. Now, when you run this scan, you can run it over 12 months, and that would give you new 52-week highs. But let's just pick new 6 months. And when we run that scan, we can rank it by the CTR, the StockCharts technical ranking. So all of that comes out, and we press the button, and we get this chart list. And in the chart list, and maybe I should do that actually. Let's run the scan. And what we see here is we get 169 entries that are making new 6-month highs. Now, again, if we ran it for new 12-month highs, it would probably drop the list slightly. But what we want to know is between October 1st and now, what's actually still hitting new highs as the stock market's making lower highs. And so we see you can rank by StockCharts technical ranking. That's what we asked it to do. And then we select industry and sector. By doing this, it's going to clean us up quite a bit. But it'll start off with all the ETFs. And as we look through the ETFs, you'll notice bond, preferreds, securities. Like a lot of these are the really safe stuff. But the home builders has been doing very nicely. In the home construction, those two ETFs, ITB and XHB, I think everybody knows they've been performing well. So as interest rates have come down, those people looking for mortgages would obviously enjoy a lower mortgage, and so that helps the home builders. So they'll start to rally. But as we look through the groups, I think the important thing here. So under communication services, so the first sector, we've kind of got 5, and if we look across that, nothing really stands out as particularly compelling in terms of something specific to be looking for. Whereas you'll see later on here, as we look at the home construction, look at all of these names and look at how high their scooter rankings are. These stocks are soaring. So that gives us a clue that that's kind of one of the strongest areas in the market. We want to make sure if you're looking to buy some consumer discretionary, that's one of the better places to be. Now, if the mortgage rates reverse, those charts might reverse. But until that happens, that's probably a good place to lean. We see Nike as a consumer discretionary footwear that stands all by itself in the segment, which is really a surprise because you would think as we head into back to school and all of the new sports seasons and heading into the major holidays, that might improve a lot. But so far, it's all alone in that space. Looking through here, through the consumer discretionary and consumer staples, I'm surprised how few consumer staple stocks are hitting new 52-week highs. Or 6-month highs in this case. So that really does surprise me. Maybe that's going to suggest that we get some sort of a rotation back into growth with so few of these starting to hit highs, and yet the consumer discretionary doing a little bit better, and Papa John's and Jack in the Box and that kind of thing. If we look through these stocks, it's a nice list to be aware of, but the bigger thing that we want to watch for is what's the rotation going on underneath the surface. So here's energy, still out of favor. Here's financials. 2 banks are doing okay. And one thing I didn't do here, and I could run up to the top and do it right now, is I didn't put this in a chart list. And by not putting it in a chart list, I can't hover over these to see the next to see a brief chart of it. So we can just go like this. I'm going to put this in Scanning Martin and preserve our sort order. And then we'll just go back to what we were looking at here. Um, so if I just sort it on the name, that should get my sort order back. And we were down here just looking at financials, still very brief, not much going on there. Even healthcare, um, relatively out of favor. I'm surprised at this. Industrial's doing quite well, but notice three of them are building materials. So following on the home builders, and then marine transportation. These stocks have been on fire lately, like this Fro. All of a sudden, these things have really started to pop. Scorpion tankers. So that looks like another area that's starting to run. And look at how high their scooter rankings are. They're all popping up nicely. That just gives us some areas to go look for, and they're just breaking out. Like this Fro chart was sitting at $9 there um, for a while and just kind of hovering. And then all of a sudden, literally since the beginning of October, this thing's just on fire. Looking down here, lots of the REITs, and this has been a very defensive place, and because it's paying a dividend and kicking back, these ones are doing quite well. The industrial REITs, a lot of those are based on new warehouses for online shipping and stuff like that. So they've been pretty strong. Residential REITs have held up quite well. Retail REITs, that one I'd be afraid of, but there's still lots of people looking in them. Obviously, the scooter rankings are holding up okay. So that's clearly the biggest area of the new highs, and money continues to pour into those charts. So as we continue to see that hold, now if we get the reversal in interest rates, then we want to watch and see if money flows away from them or if they hold up. So that's one of the I wouldn't say don't go into them. I'd say if you're going into them, just be wary that if the interest rates roll, that could actually start to impair that trade. So here's technology, and look at how short this list is, right? Real estate was scrolling off the page, and technology hasn't been that great. But one group within here, and Arthur Hill and I both pointed it out on the weekend. I wrote it up in Don't Ignore This Chart, and I think Arthur wrote it up in his Chart Watchers article. What we see is the semiconductors have been lately performing really, really well. And so that chart's just up and to the right. Paradigm, these are nice. Taiwan Semi, just breaking out about $45 at the start of the month. Form Factor, trying to get going. This one hit new highs yesterday. It looks like it pulled back a bit. Texas Instrument just bobbling with a new high there. And so some nice charts in the space and a good place to watch. This DocuSign, I don't know if you bought a house lately, but you're probably going to sign on a DocuSign, which they email the document to you. You sign it, send it back. That one looks like breaking up to new highs. So again, we're going back to a simple thing here where we've taken a technical scan and just looking through for ideas to see what's going on. And we've got kind of over the last 2 weeks, what's been working. Not as many utilities. So we continue to see utilities hit new highs on the ETF or the dollar UTIL ticker symbol. But what we want to watch for here is, do the utilities roll over with the rates? And typically they do. So I'm watching the financials, the bond market closely to see if it affects the two most prominent groups that we've had, which one being utilities and the other being REITs. So that's one of the areas that I'm watching for. I continue to be surprised that the semiconductor is setting up so well. And that one of the things that makes me wonder is if we aren't going to get this big reversal. So even though the China trade doesn't work, then we just get on with life without China, and go back to what we might have looked at and just kind of avoid the things China related. That's a much different way of looking at it. And I think the problem is the commodities are going to struggle in that environment. And of course, I like commodities, so that bothers me. But, just we're going to rotate over to where the action is. And I think, this technology area, well, it looks pretty good. A lot of the big technology stocks have pulled back hard. This Ring Central, this one's quite a nice chart. I don't know if you've been following it, but beautiful push to the upside here. So that one is nice. And uh, and Apple, I had talked to a financial person or portfolio manager, and they were selling Apple, and I was surprised because Apple's got a market buyback of 75 billion, and here they are selling a stock with so much support for the price. Anyway, Apple seems to be doing just fine and pushing up to higher highs here with the new phone, and they're still back ordered. So obviously, there's a few people trying to buy them now. Maybe Apple did that on purpose, but it seems a little odd to launch product and not have supply. So lots of people are able to find one, but the orders are starting to be filled now. But it's obviously doing well. So with that, we've kind of got a summary look here. We didn't see, our industrial list here was pretty short, right? We had kind of 10 things, and half of them were marine and building materials, and this heavy construction chart grinding higher. It's a pretty nice chart, actually. Grinding higher. Ritchie Brothers Auctioneers. This one broke out a while ago and is just kind of bobbling in around a range. I'm not seeing a lot of action in the industrials, and I think until we start to see that turn, that would be a clue. We haven't seen anything in the trucking or rails or whatever hitting new highs, so that's another place to kind of avoid. All of these add up to me to be a clue that we're going to try to avoid the China trade and pick up. Pick up where we left off pre-China. Just try and go back to what was working before that. So could be more U.S. centric stuff, and that list is. I would expect to change if we see the interest rate changes. I would expect these real estate ones to drop down and something else start to pick up. So we could keep running the scan just to check what's going on. Okay, I do want to show one thing here briefly on the 60-minute chart, and I know we talk about long-term charts, but the SPY here. What I want to show here is we had the rally on Friday, and then we pulled back down here, and now we're trying to just get some sort of upward momentum. And yesterday we finished with a big red spike down, and now ground sideways. The market isn't. Today we haven't had much bounce, even though we started with a kick. There's been no real buying kicking in so far in the first hour and a half. But what we're watching for here is, can we actually get enough momentum to start getting this to thrust back up again? And I'm not seeing it yet. So I continue to be cautious. I continue to stand back and say, don't be too assertive. But I think when we look at what started to work lately, a lot of those things are interest rate related. And if we get the interest rate turn, then we might see this whole carpet kind of shift under our feet. So I'd be watching for the sentiment to change dramatically. Another thing that I have been watching is the price of oil. And again, we had the big Saudi spike, and then all of a sudden things have wandered down here. And now we're just starting to grind a little bit sideways. We'll see if we can start to base here and get any sort of upside momentum. There was a wonderful article out the other day from the Wall Street Journal, and it said, if you're trading oil, are you looking at the shadows? Anyway, if you can find it, it's a really nice article, and it talked about floating oil tank tops, and they quickly went around the world with satellites and checked out all of the oil tank storage to see how much was built. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific on StockCharts TV. You can also catch replays on the StockCharts YouTube channel, or watch the running list of technical informational shows on StockCharts TV. With that, lastly, if you could do me one favor, head over to gregschnell.com and type in your email address, and I'll be sending out a broadcast email today with my last newsletter, and hopefully we can start to get this website up and running and rolling. Thanks.